joining us this morning. We got Shaw Wu, tech analyst at Sterne Agee Leach, and he rates the stock, not surprisingly, as a buy. And he joins us from San Francisco this morning. Shaw, good to have you back on the program. Look at these numbers. How do you make $39 billion in 3 months' time? I mean, that's what Apple did. And they sold 35 million iPhones. As you predicted, a beat here, but did it even go beyond your estimates?
No, it certainly did. The big surprise was the iPhone number, and as a consequence, because iPhones are their most profitable business, the margins were also better. So that's why they were able to beat on the iPhone unit with 35 million units. Expectations were closer to 30 to 31, and on the gross margin, they did 47.5%. Expectations are closer to 43, enabled them to do 12.30 in EPS, above consensus estimates around $10.
Okay. Shaw, any concerns about the conference call and what you heard there? Because we had Tim Cook, the CEO, talking about slowing sales growth for the iPhone going into Q3. I mean, even talking about revenue, it missed some guidance and estimates as well by other analysts.
Yeah. I mean, what's interesting here is it looks like they're going back to their vintage conservative style. Apple's very famous for giving conservative guidance, and for a while they weren't doing that, but it looks like they're doing it again. But the one thing that gives us comfort, frankly, that we think this is conservative, is that China Telecom, obviously a very large carrier, launched late in the quarter, actually in March. Yep. So the benefit of China Telecom is yet to be realized. So we think this guidance is actually going to turn out conservative.
Okay, but what about the sales declines from the top U.S. mobile phone carriers, Verizon and also AT&T? Is that a point of concern as well, that maybe they're not selling as many iPhones anymore in the U.S.?
Yeah, I mean that's a fair point. I mean the U.S. market is frankly more saturated, right? I mean the U.S. was the first in terms of smartphone adoption, and it is seeing some softness. But the reality is that the U.S. market isn't as important anymore, right? They were more than able to offset it, right, with strength elsewhere. And I think, that's going to continue to be the theme for Apple, actually, going forward, is that it's not just a U.S. story. It's becoming more of an international story, and particularly becoming a China story. So we think that's really the key.
It's interesting that you mentioned China, because Tim Cook was recently in Beijing, in China, inspecting factories. But, he promised a while ago, I mean, wasn't Apple looking to open triple digits in terms of the number of stores in China? They have single digits right now. So they really have to lift up their game in terms of store openings in China to get ahead, don't they?
Yeah, I would agree with that. I think longer term, they definitely have to do that. They have, I believe, 5 or 6 stores right now. In Shanghai, Beijing, and the way they're handling it right now is through retail partners with others, with local retailers. Plus, you have obviously China Unicom, helping out, and now China Telecom. But you're right. I mean, there's definitely room for expansion, and with Apple, they always focus on quality, right? They're only going to open a store that if it makes sense, if it's quality. Yeah.
Shaw, I'm running out of time. I just want to talk to you about your target price, because it's a little more sensible than others, calling for $1,000. You're looking at $750 still for target price for the stock. Are you going to up that estimate at all?
Yeah, I mean, right now we have a $750 target based on our current numbers. It's probably going to have an upward bias. We always try to be responsible with the price targets, so that's why we kind of take this one step at a time.
Okay, Shaw. Thank you so much for your insights today. That's Shaw Wu there of Sterne Agee Leach, the number 3 ranked analyst on Apple shares.